Hey everyone, welcome back. It is Tuesday. It is September 26th. Having a fantastic day. Hope you guys are as well. My name is Levi Woods. This is Drawbridge Finance. As always, this is not investment advice. This is just what I'm doing, what I'm looking at in the market. So hopefully you guys are having a good September. My portfolio is right on track for its typical, looking to make about 20% per year. So I have a $250,000 model portfolio that I use, and I post all of my trades to Discord where everybody can see those trades. I do live trade it with real money. And the goal is to make about $1,000 a week on that. So right on track, just looking at it right now, so far in September, 4 weeks in, looking at profit of $3,796. So just $200 shy of the goal. We've been, playing with this market quite a bit and looking at, moves to the downside. This is the 1 minute chart on SPX we're looking at right now. And when I'm looking at these types of positions, what I'm looking for is catching these down moves. So I'm trying to capture trades that make money if the stock market goes up, but they also make some money if the stock market drops down. Trade that I closed today on gold worked very, very well. Didn't quite make it into my profit. Let's just look up gold here. I never do it on, I never look up gold on Trading View, but trading at 1901, I actually, for my max profit, I made a pretty decent return on this, 2% this month on my gold trade, but what I wanted it to do is drop down to 1890 today. So it didn't quite make it there. We got very, very close. This is the 1 minute chart. If we look at the daily, we can see that this move kind of happened quite nicely. So what I was looking for, my max target range was actually from 1890 to 1840. So just about made it there. I made my 2% return instead, hoping to make a little bit more, making about a 5% return if it had dropped down. But that's the type of trades that I'm putting on, where I have a very, very high probability of making money, and being happy with making 2% a month, or about 24% return. I see there's a couple of people that have chimed in and said hello. Kevin's joining us from Lakeland, Florida. I always love when you guys tell me where you're watching from. If you've got any stocks too, jump in right away. If you've got a ticker you want me to look at, I'll pull it up. I'll look at the options chain. I'll look at the potential plays that I might put on. We'll look at earnings coming up. There's a whole bunch of stuff going on right now. So hi, Kevin. Thank you for joining. Tommy's joining from San Jose. Kyle, San Pedro. And Mike Mueller. Hi, Levi. Happy to catch the stream today. That's awesome. I'm glad you guys are so able to do this. It's fantastic. And thank you for the likes. So as always, right in the YouTube chat, just let me know what stocks you want to look at. Otherwise, I just kind of go at this. I'm going to use Seeking Alpha. Darren's watching from Oregon, which is fantastic. And hello, Darren. What do we have going on? Apple, one of the stocks that I'm looking at right now, trading at 172. So you can see this dotted line. This is on the daily chart that we're looking at. Definitely at a previous low at this point. So we saw back in August 18th, we saw this low. I put on a new trade today that basically is profitable as long as we stay above these next lows. So again, if you guys are interested in finding out what trades I'm actually putting on, seeing them real time, that happens in the Discord chat. I also do my Thursday live stream for patrons only, but Tuesdays is open, so just go for it. Autodesk, Kyle wants to look at Autodesk, so let's take a look, and we will pull up some potential trade ideas. So I'm gonna look at Autodesk. I always look at things in a couple different ways. First thing I want to do is see if it's trading in a channel, which this one seems to be. I don't trade Autodesk all the time, but if we were to draw some lines on here, we would see that, let me just go from the top of this candle over to here. And then let's go from this low down here and try to capture the bottom of these candles. And so we can see we're kind of trading in a range, and this is trading near the bottom of it. So I quite like this type of setup, especially when I'm looking to go long stocks. I'm looking at, this is the RSI, this is a stochastic RSI. When I see these all kind of coming together there and that the candles are down near the bottom of a range, this is times where I like to go a little bit bullish on a trade. So that's one thing I like to do, a little bit of technical analysis. The other thing we're going to do is I'm going to just pop over to Seeking Alpha. And I love Seeking Alpha. This gives me an indication as to whether or not this I would consider being bullish or not. So what I'm looking for is the quant rating. So let me take a look. I'm going to walk you through everything. Right now, price is at 201. Up 9% on the year. We're just looking at the summary page. And the big thing for me here is this quant rating. Right now it's a strong buy, 4.53. A couple of reasons for this. They're a profitable company. They've got good growth. They've got good momentum. If we look at where they are comparatively, of these 483 stocks in this sector, in the information technology sector, they're ranked number 48. So we're in a good potential position. Valuation is still not great. Now this valuation is based on the earnings per share. So if we look at what the P&E is and the earnings per share, is this valuation good? Could it be lower? Really looking at the chart, like looking at a 1-year chart, I don't think it's going to go much lower. I mean, we just kind of looked at that at TradingView. So, but numbers wise, it does have a higher valuation than these numbers would suggest. But this can be true for a lot of tech stocks in general. They can have this kind of high forward-looking price to earnings ratio. It's pretty typical. But this quant rating is really what I'm looking for. So another indicator that we're potentially bullish. The next thing I'm going to do is I'm going to take a look at Options AI. Again, I have affiliate links for all of these. So if you go down in the description, if you're looking to sign up for TradingView, there's a discount link there. If you're looking for Options AI, there's a really sweet discount for them. Then you just use the word all caps drawbridge to apply your discount. It's at the very end of the Stripe settings when you're going to sign up for that. A very inexpensive service and a real-time data, so pretty awesome. One of the things that I always like to check is upcoming earnings. So we've got earnings in November. So I'm well within the next earnings cycle, which is going to be out here in November 28th. So it's not even in the next 3 months. So we're good to go for that. And what I can do is I can look at a trade. Typically in a low IV environment, which we're in today. Let me pop open Interactive Brokers, and we'll just quickly look at the VIX. The VIX is actually up today, up 10%, but still marking at 18.61. So this is still in a medium. We're going to call that medium VIX range. So just slightly above its historical average. Basically, market's selling down a little bit today. SPX marking at 42.79, which we saw. Q's marking at 354. Oil pricing at $90 a barrel. And what else? IWM 174.85. So down 1%, 1.5% kind of across the board. This drove the volatility index up. I believe this calculation is based on movement. Some people think that the market moves down when the VIX moves up, but I'm pretty sure that this calculation, the VIX calculation, is a calculation based on the market moving down, therefore the volatility index goes up. It's a reactionary number. So as the market dropped, the VIX went up. When we're considering VIX plays, 18.6 is not such a bad place to be. I mean, I prefer as a premium seller trading at higher volatility, but we get what we get. So let's take a look at potential trades here. So if I want to go out, I have no problem going out around the 30-day mark when we're at 18% or 18 VIX level. And so I can see here that we've got this 191. Now, all the other indicators were bullish, so I believe I should put on a bullish trade. I can use Options AI just to generate one. I can just do like a credit put spread, and I can kind of drag that around wherever I like based on the expiration that I choose. So if I wanted to do October 20th, which is the monthly, I could do a little put spread right here. Max gain $182, max risk 818 bucks, 72% probability of profit by selling the 195 put and buying the 185 put. So we can use Options AI to generate those trades right away, and visually we can see where the stock has to trade in order for that profit to be realized. But this trade would generate a return of almost 25% on risk capital, because we would be potentially making 182 bucks while risking 818. So pretty nice little trade idea. Let's look at something, if we can do something a little more complex, and if it's smart too. That bull put spread is probably quite nice when we're looking out at October 20th, which is the regular expiration. That 195 is a 30 delta. So I would still consider, let's go back to TradingView for a second here and just look at where this line is. So let's just say October, say it was to stay on this line, where would we be? October 20th, we'd be around $200. So it's almost there. And this is, again, why I would take a bullish trade. So with that being said, what I would want to do is give myself a little bit of safety, but I wouldn't really want to give myself too much. So I'm going to see if I can set up some sort of honey trap here and see if we can collect. Oops, I don't have my strategy builder on. Let's just see if I can collect a decent amount of money doing a little trap here if it was to fall down a little bit further, because this is the market that I'm playing right now, which is safety to the downside. We're still putting on risk, but assuming that the market's going to go up. Now this $197 stock, this trade would get open for about a 25-cent credit. The total risk on this is going to be just under $500. This is showing, this trade profile is showing as if it was open for a debit of 40 cents. Let's plug this into my rolling options record keeper and see what that looks like. Let me just open up a new, show off my rolling options record keeper here for a second, because I'll show you that the nice thing about doing the little honey trap in here, just give me 1 second here. So this is my rolling options record keeper. I have a tab that I've created down at the bottom, which preloads a honey trap, because I've definitely been trading a bunch of these, but I can build this in the custom blank tab, no problem. The idea with this is that I'm just going to duplicate this to start a new trade. So I'm going to hit duplicate. This is going to create a new trade. You can see that right down at the bottom. Let's copy. I'm going to load this up as if I was entering it today. So I type in the ticker, a space, and then I usually use the date, because it's something that number changes and it gives me some sort of reference. So that's typically how I do it, but I can write whatever I want in here, or I can just write Autodesk. It pulls the current price automatically, and my transaction date is going to be today. So I'm going to put that in. The underlying price, obviously 201.96. And the trade that I'm putting in, I can put in whatever strategy description I want. I can put in notes. I can also put in notes here in cell D10. I'm not purchasing any shares. This is just going to be a little trap. The options expiration date is going to be October 20th. And then what we're going to do is we're going to look at our screen on IBKR, and we're just going to replicate this. So I'm going to be buying the 185 put. All of this is down here. I'm going to be buying 3 of the 185 put. I'm selling 3 of the 187s. I'm selling 1 of the 195s, and I'm buying 1 of the 197s. So this is how the honey trap gets set up. And usually I'm using delta. This is a pretty aggressive trap, but again, it's at the very bottom of the range. So I want to be able to make some money. I believe that I can get this for about a 25-cent credit. So let's pop into here and we'll just plug in those numbers. So super simple entry. So I'm doing 185, 187.50, 195, and 197.50. If I can type. And I'm going to open that for a credit of 0.25. And what you'll see here is that it'll chart it, but this one will actually give my real expiration. Instead of being negative, if the stock trades where it is, it's actually showing that I will make a profit of $25. And this is because I'm collecting a credit of 25. When we look at IBKR, it's actually showing a slightly negative profit profile, assuming that I'm actually paying 40 cents. Now, I wouldn't enter this trade for 40-cent debit. I want to enter it for a 25-cent credit. So this is what I'm looking at. Then it's also going to change my max return. This chart is showing 209, and this is showing a max loss of 538. But in reality, if I was to collect 25 cents, you would see that my max potential profit is 275, substantially higher, and my max risk is only 475 because I've collected this 25-cent credit. This calculation does not include, let's get rid of that. This calculation does not include commissions. So there is a place to record commissions. It does estimate the fees here based on the transaction fee per contract, but this is a cell that's easily overridden, so we can actually place the amount of fees that we've paid to date in this field. And you can just add that up each time and just add to it, and it will calculate it out. But that is the play, and it also shows the current price of the stock with this red line. What it's doing is it's updating it real time, so it's showing the movement. The idea with this trade is that in order to get max profit, we would actually want the stock to drop down in between this range between 187.50 and 195. But these traps can work quite well. Even if it drops just a little bit close to expiration, they can still generate a profit. So even my gold trade that I had on this morning had a trap to the downside. Stock was trading, when I closed it, or the gold was trading, those futures were trading at 1907. My long put was at 1900. I still was able to close for an extra 30 bucks, even though I wasn't actually in that position. So they can work extremely well. This type of trade is held to expiration in most cases, which is why I typically I do them with a shorter duration. I don't do them with that, longer duration that I might do a strangle. If I was doing something on like a gold strangle, I might do as long as 90 days in this current IV environment. So hopefully that is a trade idea that you might consider. A couple of things that we can do, we can just be bullish too. You can just buy a bull put spread. I mean, that's pretty simple to do. Let's just take a look at IBKR here and close this off. And what if we just sold a spread here, very, very tight, max profit around 200 bucks, risking about $535, 62% probability of profit. The other thing about these is if we're really bullish, we can actually go in the money with these. So if I thought that it was going to trade up around 210, if I was looking at this chart and saying, I think that by October 20th, we're going to be trading at 210, we're going to actually see the stock go up from here, then that is where I might consider putting in a spread trade like this, where I've actually put the short put in the money. I'm actually collecting $700 for this. This is a $15 wide spread. So if we look at the profit profile, you'll see that if it goes to 210, then I get to keep all the money that I collected at the beginning, $700. And if it goes down to 194 or below, then I'm losing the difference. I have to pay 15 bucks to get out of this. I subtract from the $700 that I've taken out and to start the trade, and I end up with an $800 loss. So these types of trades, when we do this, we're looking at a 50% probability of profit. This is the expected percentage when we buy shares. If I was buying today, there's a 50% chance that it's going to go up, and there's a 50% chance that it's going to go down. So we have to be pretty spot on. But these are the types of trades where we can leverage our money quite well. They do become a risk-reward ratio where we are taking 100% loss in this trade because we're potentially losing $800 to try to make $700. So you have to understand what is going to happen if the stock goes down and not up. Nike earnings. Let's take a look at Nike. So I'm going to go quickly over to Options AI. Let's go to Nike. And we're going to look at let that load for a second. While that's doing that, I'm going to zip over to IBKR. We're going to take a look at a Nike. Now the expected move, earnings are coming up. So if we look at this week, the expected move is around, what I'm doing is I'm adding up these two numbers. So I'm basically adding these two together in my head, and I'm saying, okay, it's 550 bucks times about 80%. So the expected move is around 490 or so. If we take a look at Options AI, it should be able to tell us exactly what the expected move is. Expected move is of $5.60 above. and $5, no, to the downside, we're less than that. We're under $4 to the downside. So a little bit more of a potential move to the upside. If we look at the past earnings, we can see what they did Thursday. So it isn't actually for another 2 days. I typically don't put on earnings trades until the day before, if not the day of. You can see these moves are actually pretty substantial. So in December, we're down up 12%. In September, we're down 12%, -4, and then -6 or -2. So the expected move right now is only 5%. This could be a bigger move than we're anticipating. It seems kind of small just looking at the chart. Let's take a look at TradingView and see what kind of range that Nike has been trading in. Actually, I'm just going to do it here on IBKR because we have Nike up on screen, $89. You can see that we've trended quite dramatically. So there's not that range that we saw on Autodesk. And one other thing I want to look at is and I do this with every stock. I mean, I use these tools because I think that it gives me a more informed decision. So I'm looking right now at Nike as a hold rating. It's profitable, which is great. Its valuation is still high. So even though it's been selling off the last little while, and if we look at the year to date, we're down 6% year to date. The ratings, the growth rating is a C only, and the momentum is poor. So not a fantastic review from the AI quant rating here on Seeking Alpha, but pretty good reviews by the analysts, both Wall Street and Seeking Alpha analysts. I might be inclined to look at this low down here and say, where exactly is this? So if I drew a horizontal line at the bottom, $82.31 is where I would kind of be looking at. And then I would go over to options AI. I would confirm this is 85. I'm going to look at like the 82 to see what kind of move there could be. And with this type of thing, I don't know, with this much movement, I don't know if it's very smart to play it on the very short duration. So let's go out to a few more standard deviations. Let's just show 40 on here. And if we sell the 83, if we just do a stock standard strangle, can we get enough money? Looking for about 1% of the total value. So currently stock is at $89. When I sell strangles, I like to collect about 89 cents. So this is the closest one. It's actually 11 delta, which is outside the move to the upside, 83 to the downside, which means the risk is to the downside. And we can see those break evens 82 and 99, and the expected move is 84 and 95. So these are outside of the expected move, 80% probability of profit. You know, we can play these even tighter and get pretty similar break evens. So being more aggressive sometimes can work quite well depending on what we want to do. Break even now on this tighter strangle, still $84.95 on the top side. So a little bit smaller probability of profit. Max return was much, much higher. One of the things we can do is we can use one of the tools in the rolling options record keeper to compare this. So let me just zip over here and let's just do a quick comparison on, let me clear this out so we can do a little Nike comparison. And I'm just gonna manually type in the price right now because in my sheet, I have this disabled so I can just demonstrate really easily without it moving around all the time. But 89.92, if you guys download the rolling options record keeper, this comparison tab normally does pull the price of this stock real time, whatever you input here. Mine is just changed, which is cool because all the spreadsheets that I design and build, which are available in drawbridgefinance.ca, I'm gonna push that button right there. If you guys are interested in checking those out, including the rolling options record keeper, which is a perk of becoming an options tier member. I think it's super important. I mean, it took me 3 years to develop the spreadsheet, so I use it all the time. When you become an options tier patron, you automatically get 2 versions of the Rourke, actually. You get the rolling options record keeper that's blank for you to follow your own trades, and you also get access to mine. And every month that you're a member, you get to see all of my real-time trades. So you can just look at it whenever you want. you got an inkling to look at what positions I have on at 2 o'clock in the morning on a Friday and I'm not online, you go ahead and you can take a look at those positions. They're all organized alphabetically. They have these tabs in them so you can see all of that. You can compare these trades. This is a really cool feature and I want to make sure that everybody knows how to use it. So I have a list of pre-built strategies that I use. I have notes on all of these strategies as well to my patrons, available to my patrons. That's exclusive. The only way you can get these notes is to become an options tier patron. And those get updated over time and it has my personal notes on every single different type of trade that I trade. But in this case, we're just going to look at a short strangle and we're going to compare two short strangles. So we're going to put these at the same expiration date. We're basically just copying the information from here. This is September 29th. We're going to do the 87.93 for a credit of say 295. Let's see if we can remember all that. So 295 for the 87.93. So the first thing we're going to do is we're going to put this in. And when I choose short strangle, you'll notice that it just shows me the cells of which to fill in. So it automatically, if I chose like a butterfly, it would choose these white cells. It would make the ones white that need to be filled in. But since I'm doing a short strangle, then it shows me these are the cells that we want to plug in. So I'm going to sell a short put and I'm going to sell a short call and 87.33. And we're going to collect a credit on this of $2.95. And what that's going to do, I'm just going to delete these, is it's going to chart this out for us to look at. So we can see there's the strangle. This is where the spreadsheet gets really cool. So we're going to do another one, September 29th, and we're going to compare it. We're going to say, well, what if overlaid, what if we only did the 83 and we did the, what was the other one? We're looking at the 98. That's a pretty decent credit. Let's go out to the 11 delta here. So this is that 80% probability trade to make 1%. So we're looking to collect about 86 cents. We're selling the 83.99. What does that look like? So we can say 83 and 99 and we're collecting 85 cents. And this is, I've never seen anybody else build a comparison calculator. This one's actually a little bit wide. This range isn't even showing. The red line's not even showing. So I'm going to zip down here. I can just change the increment. I'm just going to change it to 50 cents. So it shows a little bit more zoomed out version. Now we can compare these two. We can say, well, what happens at expiration? You can see why I might want to take that extra risk by trading that tighter strangle. I have way greater potential and I have increased my break even or decreased my break even by that's kind of the incorrect thing, but I've increased my profit potential while I've brought my break evens in. So this is what I'm doing. And I can now really kind of micromanage this. I can say, well, I think that Nike is going to go up from here on earnings. So what if I played a different type of trade? What if I sold the at the money put and I sold the at the money call? Now I'm going to collect $3.10 and for the 90.99. So let's just do another one here. Comparison 3. We're going to do short strangle, September 29th, and we're going to do the 90, 93, sorry, 99 we said, and we're going to collect $3.10 for that. So if I was super bullish, that is a very nice looking profit profile. I make actually more money than selling the short strangle, but I'm taking much more downside risk. I've reduced this break even over here. I've also given myself a lot more room to run if Nike does choose to run up. So this is where I can compare these strategies real time in the record keeper. And what is going on? I'm trying to scroll over and I don't know why I can't scroll over to see. It wasn't allowing me to scroll over, but just showing you, it shows you what I'm charting. So comparing the Nike short strangle, the September 29th in blue, that's the profit profile. And then the September 29th, 83.99 is this red one and this yellow one. So it's super powerful way to compare these trades when we're looking at and making considerations based on our own evaluation. Kevin says, hello from Calgary. Awesome to see you, Kevin. Always good to have you online. I see there's 15 people. I've got 8 likes. You guys are so great. Thank you so much for the love. If you haven't clicked that like button, please do. Leave a comment. Let me know what stock you want me to look at. We'll get to it. Mike Mueller, what do you think about market internals? tick, add, etc. For what you do you care much about them? You know what? I don't actually. I don't even know what tick or add is. That's almost embarrassing when people ask me things like that, and I'm like, I don't know what that is. What is a tick? An ad. I don't even know what either of those references are. So that's how little I care about them. I've been option trading for 9 years, fairly successfully. You know, I do very well. I make a living off of it, which is fantastic. I've been trading since 1996, way before I even had internet. I used to phone and do my trades on the phone, believe it or not. It's making me feel old that I can say that, but I don't use either tick or add for what I do. So thank you for that question. And I'm going to have to do some research because I am slightly embarrassed that I don't know. Iron Will says, hey brother, how can you change an order from a credit spread into, let's say, a butterfly or an iron condor? I've seen people do that, but I don't know how to do it on IBKR. Well, when we're looking at any sort of trade, basically what we're doing is we're holding positions. So if let's just say that I had a spread on here. Say that I had sold this spread. I am 48 cents. This is not going to fill for 48 cents. Let's just do it for 46 cents. I'm going to submit the order. We're going to say override. We're going to go look at the account. It's going to tell me that it filled here. Hopefully will get filled here. It's going to take a second, but basically I'm trying to collect the minimum credit. I would never do this in my, let's just do it for market. I wouldn't do this in my regular platform. I would always do it for a limit order, and I would always have a specific amount of money that I want to get. But I'm trying to get this filled so we can do this real time, show you what it looks like. And it's not looking very good. Why is it not filling? This is one of the problems with paper trading. I don't love paper trading. But let's just say that we have this position in place, and I'm going to change the settings here, and I'm going to add a column. Let's just go add, insert a column. We're going to insert a position column. So I'm going to click on this, which is showing no positions. And again, don't know why this isn't filling. This isn't helping IBKR. I'm trying to demo your platform and how great it is. Your paper trading is not filling. Okay, frustrating. So what's going to happen is that it's going to show as a bull put spread in here. What I then could do is I could convert it to a butterfly very easily by just selling the other side. So if I wanted to sell a call, I could do that for a credit. And what that will do, let's do the same thing here. Let's see if this will, I'm going to turn this off a limit order. I never changed this, but there we go, market. I'm going to go submit order, and we're going to say override and transmit. And now it's going to end up as two separate trades, but we'll end up with a butterfly because I will be short I will have a bull put spread on and a bear spread on at the same time with the same strikes at the 86. And again, I don't know why this isn't filling, but that's as simple as it is. I mean, the reality of whether or not it's 4 trades in my trading platform, 1, 2, 3, 4, all individual, or if it's entered as a butterfly, or if it's entered as 2 spreads, it doesn't really matter. Ultimately, it's how much credit did we collect, and what is the position that we have on right now. That is key. Now, with some people like to leg in. I mean, I'm not that person. I've never been that person. I don't like to try to time the market and like assume that it's going to move up or down. If you're really good at that kind of thing, if you're like can see a setup and you can take one side of the trade, then it can work extremely well. In my own experience, I'm not that great at it. It's better for me to just put on the trade as intended. So I'm looking at those overall levels, and I put on for an appropriate amount of credit so that I have an appropriate amount of risk to reward based on what I'm seeing on that particular day. I'm not trying to leg into trades, but it's legging in or making a trade complex is as easy as just adding those different positions. I could build it. Let's go back one more time. I could build it all individually. So I could buy the 84. Let's see, maybe this one will work. Let's do the 84 and we're just going to go submit. So that filled. Now we're going to sell the 86. Same thing. We're going to collect. We're going to do this on market and we're going to go submit. And then we're going to sell the so now we have a bull put spread in the account. If we look here, it's broken up, but that's what it is. There's an 84, 86. And this is again where I like my rolling options record keeper for exactly this reason. If the brokerage ever breaks up my trades, my Rourke doesn't. It allows me to look at that trade and say, what was my intent? What did I have on when I made all these adjustments? So then the next step would be to collect a credit for this. We're going to do a market order on the selling the 86 call. We're going to go submit order. And then we're going to buy the long wing on the top side. And again, for a market order. And you'll actually see that I had a pretty big margin impact on that last trade when I sold the naked call, which is again why I like to put these all in as a single trade. And hopefully you're getting good fills. But the margin impact is actually reducing by me buying this wing because I will be reducing the amount of overall risks to the top side. So now I have my butterfly in play, and it doesn't matter that all four are separate. Now, how do I enter this in the Rourke? What I would do is I would add up what the fill price was. So I would just add up these four numbers. So in this case, it would be a debit of 405. So if we do it with the calculator here, let me just pull up the calculator. And then we'll take a look at how I would calculate this math. So the first thing is going to be a 405 debit. Well, now it fills it. Which one did it fill? The 8486. So now it's showing it as a bull put. And again, ultimately it doesn't matter. You've got one as a bull put, and we've got one, this is also a bull put spread. They're the same position. Both of them are long the 84 puts. Both of them are short the 86 calls. So let's go back to this calculator and plug in these numbers. So the 405 is a debit, and then I'm going to have collected 525. So this is going to be a credit of 525. And then the next one is selling the 86 put, and I collected $1.06 for that. So we're going to say plus $1.06, and then we're going to say minus 0.61, which is the put debit. So minus 0.61. We're going to get a net credit to open on this trade. So in this case, should not be a net credit. Yes, it should be a net credit to open because I've done in the money calls. So it is a net credit to open. And currently, if the stock traded here, I would actually lose money because I would have to pay to get these calls out. So if it didn't drop down into the butterfly, which is optimally around the 86 strike, then I would have to pay $2. So I'd end up with a 35-cent loss. So there's so many different ways to skin a cat. I mean, there's the other order that just filled. So now we're starting to see these positions in here, and we can see them in different ways. But ultimately, the trade itself is the same. It doesn't matter if it's collectively joined like this or if it's broken into individual lines. You can see what I have on. I've got 2 short puts that I would have to pay to get out of. I've got 2 short calls that I would have to pay to get out of if it doesn't drop down close to this 86 range. So that is kind of how you manipulate those trades. And ultimately, what I'm concerned about is my total aggregate position, not these individual positions, which you can actually see in the risk manager. So if you go to, if we just go to new window, we go to portfolio tools, we can look at the risk navigator and we can open my portfolio. If we do that, if we click on Nike, let's just pull this up into a range. If I click on the underlying here and I go to Nike, then it will show the positions and I can select the date and I can say, well, what is this date on October 10th or on October 20th? Oh, where's my profit loss chart? And this is doing a poor job of showing the little spike in here, but there's a little tiny spike in here. The charting in IBKR is not fantastic. And again, this is why I use my rolling options record keeper. If we wanted to put this trade in, I would just very simply go down here to a custom blank, or not even a custom blank. I can do a butterfly in a regular trade here. So I'm just going to say duplicate, and let me zoom this in for you guys just a bit. We're going to do we're looking at Nike. We're looking at Nike. What are we looking at? What is this stock that we're looking at? Nike. And we're looking for a net credit of $1.65 for this trade. So let's pop back over here. And we're going to say we're going to put this in today. The underlying price, 90.21. The description is going to be a butterfly. So we just type that in. This is a put and call butterfly. So PNC. Options expiration date is going to be the 20th. And we're going to put the long put at 84, the short put at 86, the short call at 86, and the long call at 88. We entered this for a net credit of $1.65. We did one contract. So we can see here that the margin allocation for this trade is $35. That's what the max risk is. The max potential return is $144. It's this very, very narrow range. I can adjust how wide that butterfly appears by just changing the increment for displaying. Right now, every strike there's a $1 increment on here. So these are $1 apart. When I'm trading something this tight, I would change this to like 10 cents or 25 cents so that I can see if I thought that it was going to go to $88, how much would I lose? If it went to 87.71, I would be down $6. And you can see now where the profitable range is. It has to be somewhere between about 87.50 and 84.50. So that's kind of the target. I want the stock to move from its current price here down into that 10 right at expiration. So butterflies, I don't open a ton of butterflies to straight out of the gate unless they have a setup where there's some sort of credit. Typically, if I was doing something, I would do like a broken wing where there's actually the profit chart is above here, and I make some money, looking for a potential bigger money if it drops down into the range. So that's kind of how I set up butterflies. I don't do a ton of them straight out of the gate like that, where I'm risking only $35 trying to aim for this narrow window. It's just not the type of trade that I do. Summer, what is the technique to structure a trade? Kyle says, thank you. You're welcome. Summer, what is the technique to structure a trade? Can you clarify, Summer, what you mean? I mean, you can see kind of how I'm thinking and processing. I mean, I'm looking at range. I'm looking at a little bit of technical analysis. I'm looking at different platforms like Seeking Alpha, Options AI to say, hey, where do I expect this to go? And how much money can I make? So if I'm looking for just like structure, then, this record keeper actually helps quite a bit. I mean, I can open this up and I can choose a trade. So if I say, let's just go back to Autodesk. When I'm looking at, I'm going to fill this in so that it looks correct, 201.66, the strategy description, I can just choose these different types of trades. So I might choose a big lizard or a Batman or a butterfly. And this will help me kind of decide what it is that I'm trying to do. I tend to trade quite a few complex things, and there's a couple of trades in here that you may not see anywhere else. Like a humpback is a drawbridge original. Jade Lizard obviously is a Tasty Live trade that they've been using forever. PMCC is a poor man's covered call, so this is very, very common. But Ramparts, Rhinos, Scorpions. Rhino is a Tasty Live trade. Rampart and a Scorpion are both drawbridge original trades. So is a Unicorn and the Viking. Call zebras, put zebras. These are Tasty Live. So there's different types of strategies out there. Jade Lizard, again, a term coined from Tasty Live. I don't have a Twisted Sister in this list, but you can always just type in custom and put in whatever you want. This allows you to put in whatever you want, up to 2 long puts, 2 short puts, 2 short calls, and 2 long calls. Again, if you want to do something custom, there's the custom sheet, which it looks a little bit different, but you can do as many as you want. You can just put in here, I'm not trying to do that, but I can just choose a long call and then I can put in the quantity. So you can build out really complex things. If you're getting even crazier than that, if you go over to my website, you can do a Green Giant. I usually only use the Green Giant trade for cash settled positions. So if I'm doing like SPX trading, something that settles to cash, because you don't want to have something too complex that you can't get out of overall. But you can build fairly complex things like put ratio spreads that are like 3-to-1, or like a 1-1-2 trade is pretty typical, where that technically has 3 short put contracts. So that's where I would use the custom sheet in the rolling options record keeper. Terry Mahoney, is there a synthetic version of that bull put spread on Autodesk that I can use in my TFSA? Yes. Yes. So if we wanted to, that's a really good question. Say we wanted to do Autodesk, but we wanted to do it with a position where all we could do. So let's try it. Let's try this. This is again where the rolling options record keeper is going to help us compare this. So I'm going to load up the first trade that we're trying to simulate. So say we want to do this bull put spread. This is the goal. We're going to buy the 195 put. We're going to sell the 210. We have a profit profile that looks like this. We're trying to make $700. We're trying to risk $800. Can we put this on in the Rourke and see what we can do? So this is the 195, 210 for a total credit of, it looks like 725. So let's do that. 195, 210. So I'm going to zip over here. We're going to go to the comparison tab. I have Nike up here. We're going to go back to Autodesk. It doesn't really matter. Stock is trading at 201.62. So we're going to type that in, 201.62. We're going to do a put spread. So I'm going to change this to a put spread. You're going to see that it's going to highlight in red. It's going to say, hey, whoa, there's no short call in a put spread. Get that out of there. So delete that. The long put in this case was going to be the 95 and the short put was going to be 210. So that's what we're trying to replicate. And we're collecting a net credit of, on this trade, what did I say? $7.25. So the net credit of $7.25. And then if we look at this, let's get rid of these guys out of here. It should, it doesn't look like it. See, it doesn't have this downside protection here. Something's going on, 195, because I put in 95. It should be 195. There we go. Now it looks like a bull put spread. That's what we're looking for. That's the profit profile. And this is kind of how we can compare just to our brokerage. Are we doing something right? Are we putting this in correctly? So the idea here is to do I'm going to do it as a custom. So we're going to try to replicate this with stock. So can we do it? I believe we can. We're still going to buy the put. So what we're going to do is we're going to take this short put and we're going to do a synthetic version of it. So we're going to eliminate this. We're going to sell a call. We're going to buy some shares. So we're going to buy 100 shares. So this is going to cost me a credit of, or a debit of $202 basically. So, but I'm going to buy 100 shares of stock. I'm going to sell the 210 call and I'm going to buy the 195 put. So let's go back over here. Click on this. We're going to say shares purchased as part of this strategy. We're going to say 100. We're going to do the same expiration date, and which I can't even remember. The expiration date really doesn't matter because we're just looking for end position. We're going to sell the short call at 210, and we're going to do this all for a debit of 202. So I'm going to have to put in $20,000, but I actually end up with a position that I'm looking just at the difference between these. The stock price is slightly changed. And this is why I have that not updating real time. So, or the fill is inappropriate. I'm not going to be able to get a credit of 730, or maybe I'll be able to get a little bit more. Maybe I'll be able to get a credit, because these should be rather identical. So I would assume there that this entry is going to be closer to 750, and we're going to end, and this entry is going to be a slightly less than this. But we're looking at a, sorry, this is going to be a debit of 202.10, let's say. It should be rather identical. So there's the synthetic version of the put spread for a TFSA account if we wanted to do that. And again, that's the buying the 195 put, which gives us protection to the downside, so we cannot lose more than $710, even though we have 100 shares, because we're basically protected if they go less than that. Then agreeing to sell them for 210 if they go up. It does tie up $20,000, but it does allow you to put that trade on in the TFSA. So may not be the best use of margin in that case, but it is what it is. So that is the synthetic version of that. I don't like to do that on huge high fly-in stocks like that, because you're basically tying up 20 grand to well, you're still making potentially $700. Yeah, I mean, it's certainly not a bad trade if you're right, but you do need that $20,000 to do it. Darren's asking, I keep saying it, if you are a serious option trader, the Rourke is like a lifesaver. Basically, you aren't trading options until you're using the Rourke. Thank you so much, Darren. That is such good feedback. That I'm going to screen grab that. I agree. This was something that it took me a long time to develop. I wanted to basically look at every one of my trades and say, when I'm making an adjustment, how does this work? How much money have I collected? Am I making an adjustment that increases or decreases the amount of profitability at this particular stage? Again, if you want it, it's part of, if you're not already a patron, you guys should be. Sign up for the month. It's the cheapest way to get it. Even if you just sign up for 1 month, you get all my trade alerts. You'll be addicted to the chat room anyways, because all we're doing is putting on awesome trades. So it's pretty great. So thank you, Darren. It is my baby. It took me a long time, and now I've been selling it for 2 years. So I've been 5 years of invested in that, and I use it on a daily basis. I could not trade without it. So pretty awesome. Mike, your answer about tick and add was perfect. You said all I needed to know. Okay, great. I'm glad. Todd Pepper, bullish trade in ACLS. Ideas, please. ACLS, what is going on? I haven't looked at ACLS. I don't even know what it's trading at right now. So good question. I have been bullish on ACLS in the past, down 2.8% today. Let's look at the chart. Holy, yeah, okay, great. I love it. I love it that I've been paying no attention to it, and it's come down into this range. Let's go look at Seeking Alpha. I'm assuming that it's going to still have a buy rating on this. ACLS, oops, no, that's not what I'm looking for. ACLS and ACLS. Let's try this for the 14th time. Strong buy rating of 487. We've got the valuation still a little bit high. Growth is great. Profitability is great. Momentum's great. Revisions are great. Information technology, semiconductor material and equipment, ranked 11 out of 583 in its industry of 29 companies, ranked number 3. It's year to date up 166%. So this isn't with its downside risk. Stock trading at 153. At this point in time, with this kind of rating, what I have done in the past is I have just gone long positions. So let's take a look at the chart here and see where it might be. ACLS. I'm gonna look in trading view for a second just to kind of see where we are. I'm gonna draw a line on here from I'm going through these candles here, just to see what's happening, if we're breaking and what's going on. So there's the current trend. I still think we could still see some downside with this just because of the previous positions that we're on here. I'm going to be really, I'm going to put like a 120-ish kind of in this previous range where we saw some consolidation. I'm going to look at that and say, okay, that's where I want my break even to be. Let's look at options AI. If you guys want to email me, there's my email address, drawbridgefinance.ca@gmail. You can send me an email. If you have any questions about anything, we're going to log into options AI and we're going to look at ACLS. And we're going to look at the earnings because I want to see when the earnings are. November 11th. So I want to play before that. So I'm going to go 3 months out and we're going to look at the October 20th. That's all we've got. The expected move is only 139. So, and I said I wanted to break even at 120. Let's take a look at what we can do here. 120 is way too low. That's the 4 delta, October 20th. So just doing a quick look, 135 is the 16 delta. That's kind of where I want to be trading. The credit for just selling a put here is 185. If I wanted to be bullish, 16 delta, collecting that much money, I think as usual, I would try to put this in as some sort of ratio spread. Let's go as a 1 to 2 and just see what it's getting. So we're getting about $1. Just under $1, so that's not quite working. And if I do the 3 to 1, I'm getting way more money, but I'm also buying 200 shares. So this is where I might buy the 130. This reduces me back down to only being on the hook for 100 shares. So my max losses in this is going to be about $13,000 if it went to 0. If I didn't buy this put, you'll see that it's going to be double that. It's going to be 26,000. So that's why I'm setting that up in the way that I'm doing it. I'm looking for a very low break even. This one at 131, which is slightly higher than I originally would have liked, but still 88% probability of profit, collecting about $158 on $135 stock in 24 days. So this is my 1% if it stays here with the potential of making up to $500. Worst case scenario, I'm long this stock at a break even of $131. So if we go back to this chart, we take a look, then I'm buying here at 131. So this would be this is my break even on here. And I can do this, right? No, can't remember that. There we go. 131. So right around there, that's my break even. I would be happy to buy the stock at that level. So if I'm happy with that, that's where I would put on. If it's a bullish position, again, we can do all sorts of things. I mean, that's just one idea. That's something that I've been doing just because I feel like there's still potential downside in this market. The 155, 130 December. Wow, that's too far out. Let's look at the October. Max gain. This is a put credit spread. They're pretty aggressive. Selling the 155, buying the 130. Max gain 727, 63% probability of profit. I would probably drop this down a little bit and say, what if I was closer to the expected move? 73% probability of profit, $312 gains, max risk 1188. This is selling the 145, 130. So these are different ways to skin a cat in any way, shape, or form. So there's another trade idea that I might put on if I wanted to risk $1,100, make a maximum of $312. And again, we can, you can just dial this up or down as much as you want. 59% probability if we did the put spread that's in the money, we're selling the 160, looking for that bullish move to the upside. Still making money if the stock doesn't drop any more than it already has, if we think that it's found a bottom. Okay. Freddie Plows, hello. Is it possible if you could do a live video on how to open a trading account? Sure, on IBKR? Yeah, I can do that. Yeah. Freddie, do you not have an account? I've never traded before, but would love to learn. However, I don't have much money to start from. Any advice from a 16-year-old? Well, I started trading when I was 16. When I started, I actually couldn't open an account in my name. I actually had to get my mom to open an account. So I took my money that I had from my paper route and my very first job that I got when I was 16, and I deposited that money into the bank, and then I actually got my mom to open an account in her name, and then I was able to put that money in. I was able to start trading. So I think that the key for me when I was that age was that what I wanted to do was make sure that I was consistently contributing to the account. And I actually started to play with that money and make a little bit of money doing some trading. But for the most part, those trades were kind of long-term buy and hold. Then I was basically like swing trading stocks, looking for similar setups to we were just looking at ACLS and saying, okay, I think it's at a good range now. This looks like a good opportunity to buy. I'm going to buy, and hopefully it goes up over the next course of the next couple of months. That's the type of trading that I was doing. The most important thing for me at that age was to work more than I traded. I didn't really start, like I've been trading for a long time, kind of passively. Obviously not very passively. This is pretty active what I do now. But I haven't been an active options trader for until about 8 years ago. So I was in my mid 30s when I finally made the switch from being like a long-term investor and making that switch into options. If I was starting out and I was looking at starting an account, I would probably, if I was Canadian, I'd look at like Wealthsimple, something that I can very easily make contributions into. I love Wealthsimple. It's a great little platform. You can set up direct deposit if I'm for Canadians. In the States, I mean, you've got companies like Robinhood, Webull. Again, once you're of age, you may have to get your parents to do that and you know, sit down and have that conversation and say, what is the goal here? I've got a job and I want to put in this money, X amount of money, and get those contributions going in. I think that that's an important life skill in general. Getting those fundamentals down when you're young and understanding that we don't spend all of the money that we make is an important aspect of growing that future wealth, that generating, wealth generation basically is what we're looking for. And to do that, we have to make it a focus and say, we're going to put in this amount of money automatically. Then I would just invest in an index fund, like for Canadians, XSP, really cheap. It's like $40 to get into a share. For Americans, you can buy SPY. Can't buy XSP. Sorry, I said XSP. XSP is the ticker for Canadians. SPLG for Americans, that's the one to buy. Oh, we should just look both those up so that I'm not just talking. Whoa, on the wrong screen here. Let's look up SPLG. I have hold SPLG myself. This is a super passive investment strategy. It's very inexpensive compared to SPY. It's actually cheaper. The expenses are cheaper. So the SPLG expense ratio is 0.0%. If you look at SPY, you actually pay more for it. It's 0.09. So it's considerably cheaper to own SPLG. And at this point in time, it's $50 a share. So if you were in a position where you could contribute, $50 per month or $50 every week or $50 every 2 weeks, whatever it is that you can afford, typically I would look at it from an annual point of view. I would say, what is it that is a reasonable amount to invest? I'm 16. If I put in $3,500 a year, I divide that by 12. Then if I put in a monthly contribution of $291, that's like the top goal. I also understand that it's hard to do. When I was 18, I was putting $200 in a month, and it was very difficult to put that $200 in. That was 20 years ago. So it was a long time ago, but that's kind of the math on how I would set up that account. I do have a video on how to set up a Wealthsimple account. Supposedly it takes 5 minutes, but it takes about 15 minutes to do it. So those are the kind of things I would look at, looking at tickers like that. Okay, who else? JT Croft, IBKR in the US is 18 to open a cash account and 21 to open a margin account. Really, 21? Wow, I had no idea. Thank you, JT, for that. So that's pretty typical. I mean, it's adults are 18 in North America. So I didn't know about 21 for the margin, but I guess that must have something to do with credit rating, because margin accounts are trading on margin, which is a form of credit. If that's something that's appropriate to you. I use only a margin account. I don't use a cash account. Freddie, awesome. Thank you. This is the best and fastest response I've ever heard. Love the way you respond to everyone with a detailed answer. Yeah, you're very welcome. This is what I'm doing here. We are at 12:05, which means my time is up. If somebody quickly jumps in with one more question, I will answer it. But otherwise, we are going to wrap it up. And to wrap it up, we're going to look at something else here. I'm just going to look at the market, which is down just substantially right now. SPX trading at 42.71. Down 1.5%. Wow. Let me just show you guys a little black swan hedge. Hedging is something that I have added this year to my account. This is a great little trade. It's pretty amazing how it works. So this is just a super quick thing. Basically, it starts with short puts. We're going to use the short puts to finance long puts. In this case, we go out somewhere between 90 and 120 days. So in this case right now, I'm using ES because it uses less margin. This futures contract expires December 29th, so 94 days away. If we look at all of the strikes, what I'm going to do is scroll way, way down. So I am going down, down, down. I'm looking for the bid ask that is going to generate $3. This is what I'm looking for. So in this case, the 2650 put. If I sold these today, I would collect, this is ES, so it is it's 50 cents on the dollar. I'm going to do 3 of these. If I collect 315, the actual amount of money I'm going to receive is going to be 315 times 3, but then divided by 2 because this is ES. So it's going to be about $450. So if we go to submit, here it is, $472. What this does is it credits my account today. So I would go override and transmit. I'm going to fill that order, 315. It's now going to show in my portfolio. If I go to my portfolio window here, we're going to see that we have this December, that's an ES contract. I don't even know why that's there. We've lost some money on it because we were long the ES. In some prior video, we were long while the market's been going down. But this is ES puts. So I have my cost basis is negative, and this because this was a credit to open. I immediately am going to put in 2 transactions. So I'm going to right click on this, and I don't know why it doesn't show here, but there's a little menu. I'm going to choose close, order entry. I'm going to buy these back, and I'm going to put in a limit order. I'm going to put in the limit order for 20 cents. So the idea is that I'm going to buy this back for 20 cents, these 3 positions. I'm going to hit submit. I'm going to change this from day to good to cancel. I'm going to hit submit, override and transmit. What that's going to do is it's going to show this in my order window in IBKR. So we can see that we had one filled. I collected 315, and I'm going to buy back those contracts. Should be 3. I'm going to buy back all 3 contracts for 20 cents, hoping that in the future the value is 20 cents. I'm also going to put in another order. I'm going to go back to the options chain. That's not the chain. Let's look at the chain. I'm going to go 1 strike below, and this is a ratio trade. So I'm going to put in an order to buy these same positions, and I'm going to pay $1.70 for these. Now this one isn't going to fill either. The idea is with this is that I'm going to pay $425. Now remember, I just collected $472, so I'm paying back $425. I could even go more aggressively than that, but that's about the right ratio because I'm also going to have to pay back the $60 for the other position when it fills. 20 cents times 3 divided by 2, so it's actually only $10 to close those, $30 to close those. But this debit is going to be submitted as well. And this is stuff piled on my desk here. I've got good to cancel. I'm going to submit. And I am buying 5. Now this is the 2600 put. The other put that I just sold is the 2650. And I'm going to hit override and transmit. What this is going to do is it's going to leave these 2 orders in here. And essentially, when I'm done this trade, I won't have made any money. I'll have collected $472, and I'll have given back 30 for this, and I'll have given back 425 for this. So net with all my commissions and everything, I make $5 or $10. It's very, very little. But once these long puts fill, and it's pretty aggressive pricing. If the market moves up, we can put this on, and what this will do is give me a profit 10 to the downside. If I look at ES right now, and actually I'm going to close this ES position because it's going to mess up my my profit profile. So let me just sell this off at the market price right now. I'm going to override that and take that loss. So if I go to the risk navigator and we look at ES, right now there's tons of risk on. Because I have these puts on, I've agreed to buy the stock. If it goes down, you can see in my profit 10, if ES goes down to 32.50, I'm down. You know, my account's going to lose 30 grand. I hope that this is a temporary time. When I'm putting these swans on, I'm able to buy positions and buy these long positions that will start to create a curve that creates a downside. The very first entry is the worst one, but once they're in, I'm just adding to these black swans constantly. So I just wanted to give you guys like a quick little, you know, how to set up a black swan hedge. I know that was a whirlwind, but you guys are great. And I like to give that kind of feedback because it's the only hedge that I am now using. Okay, you guys are great. I'm going to push this button that says, let's get rich together, because that's what we're trying to do. If you do have questions, just reach out anytime. Discord, Facebook and Instagram are not the best way to get a hold of me, to be honest. I don't love social media all that much. Send me a message on YouTube, comment on the video, send me an email, any of those things. You guys are amazing. Thanks so much. Take care. Bye.